The Dunham Quarter in Twos gives you a concise outline of what we view as the most notable economic events that occurred this quarter, involving domestic markets, international markets, and the bond market, all in about 2 minutes. 1 year ago, March Madness 2020 took over, and not the NCAA version we were accustomed to. As a result of the COVID-19 pandemic, the U.S. equity markets slid into a bear market and declined 34%. 1 year later, in March 2021, March Madness once again commenced. This time, 2 new teams were on the court, Team Caution and Team Optimism. Playing on Team Caution was the uncertainty surrounding new coronavirus strains and concerns regarding inflation. Team Optimism was equipped with the continuous rollout of vaccines, the approval of a $1.9 trillion stimulus package, and the pent-up demand for goods and services. The equity markets played in favor of optimism. The S&P 500 gave a total return of 6.17% for the quarter, with the Dow Jones Industrial Average also providing a return of 8.29%. Another promising player was value stocks. The strong performance from value may result from the economic recovery, rising interest rates, and inflation anticipation. These factors created conditions more conducive to the high dividend yield of value stocks, and caused growth stocks, which depend more on future cash flow, to take a step down on the leaderboard. In the bond market, investors were also cautious of potential inflation. According to a Bank of America survey conducted in March, the top 2 anticipated challenges for fund managers were inflation and concerns that the Federal Reserve could unexpectedly taper its monthly asset purchases. On March 17th, the Federal Reserve reaffirmed its commitment to keeping federal fund rates near zero, achieving an average inflation rate of 2%, and increasing its holdings of Treasury and agency mortgage-backed securities until maximum employment and price stability goals are achieved. On the last day of March, the 10-year Treasury yield hit 1.74%, a significant increase from the March 2020 yield, which was 0.67%. The bond market's performance struggled, as rising yields are synonymous with falling bond prices. Not only were the U.S. bond markets down, but the Bloomberg Barclays Global Aggregate Index ended the quarter at negative 4.46%. International markets had a stronger performance, with the MSCI ACWI ex-US index giving a total return of 3.49%. Caution and optimism will likely remain key players in the upcoming quarter. As 2021 continues, we'll keep our eye on the continued opening of the U.S., the potential for new coronavirus strains, as well as the overall impact of the distributed stimulus payments.